The festive season is set to dawn upon us in about a fortnight. With no pandemic blues soaring the sentiment this time, the pent-up demand is set to bring cheers to India Inc. To that effect, demand for consumer loans is likely to get a big leg up in the coming months. A CRISIL report recently pointed out that non-bank lenders' asset growth is expected to jump to a 4-year high of 11 to 12% this fiscal. According to the agency, with NBFCs focusing on higher yield segments, unsecured loans, which have the second largest share of 16 to 20% in the AUM pie, may be the only segment to touch the pre-COVID era growth of 20 to 22% this fiscal. The growth, therefore, is keeping analysts upbeat about consumer finances.
This will be probably one of the first for up to 2 years where everything is almost near normal. There won't be any impact of any, say, restrictions for consumer spending and on, whether it is a two-wheeler or consumer goods and everything. So there should be demand for that. And there is still good amount of pent-up demand that is going to materialize. So consumer financing companies, the larger ones, will still benefit and they will do good this quarter also. And another factor is that, a lot of cleanup also has already happened in the balance sheet side. So we had not seen much of issues with regards to NPA during COVID. Jitna provisions created, that was decent enough. So now incremental provisions will not be significantly higher. So probably you will see that earnings growth picking up in a fairly decent manner compared to loan growth, right? Because your provisions will not be very high. And consumer finance companies, by default, they have a good pricing power. Even if there is a bit of rise in interest rate, it really doesn't impact in a big way to their growth, basically. So that's why we are in general positive on the consumer finance companies, on the larger one.
Analysts say investors should watch out for any spike in non-performing assets 1 or 2 quarters down the line.
I don't think there is any issue with consumer finance as far as the offtake is concerned, the credit offtake is concerned. The issue we need to see is whether NPAs move up or not. Because whatever said and done, there's a pain at the lower end. The repayment has to be seen, which normally takes about 9 months to a year to understand whether the account is good or not. So for this quarter, we'll possibly see a good growth, but need to see as to what happens to the NPAs going ahead for the next quarter.
At the end of the June quarter of FY23, Bajaj Finance, which is India's biggest consumer financer, has gross NPA of 1.25% as against 1.6% in Q4 FY22. Net NPA, meanwhile, was 0.51%, down from 0.68% sequentially. For Shriram City Union Finance, GNPA stood at 6.11% in Q1 FY23 versus 6.31% in Q4 FY22, while NNPA was 3.32% as against 3.30% in Q4 FY22. Yet, analysts believe that consumer behavior isn't as bad as feared. Therefore, there isn't any serious concern on the NPA front for now. From an investment viewpoint, analysts suggest accumulating Bajaj Finance and M&M Financial Services from a long-term perspective. This, they said, should be done on dips as valuations look expensive at current levels. On Friday, investors will prepare themselves for the US Fed's meeting, slated next week. Other global cues and stock-specific news flow will guide the markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.